Hey everyone, it's Evan here with our weekly trade recap. This is where we cover all of the trades that we closed out this past week. These are the alerts that get sent out to premium subscribers, and we're going to cover the thought process, sort of rationale for entering, managing, and exiting the trades. We normalize everything on a $50,000 trading account. You can see the results down here, risking 1% per trade. So if you risk more, risk less, have more, have less, you can adjust those numbers accordingly. And as always, you can subscribe to real-time trade alerts by heading to our website, traderisk.com. For as low as $25 a month, you can get access to all of the trades that we make in real time. So let's jump into them. The first trade that we closed out was TZA. So TZA is a 3X inverse ETF, bearish ETF, to the Russell 2000, to the small cap index. So we're going to look at the IWM, and we're going to give you sort of our thoughts here based on the IWM, because this is effectively the underlying instrument that we're trading. So this again is a bearish play on the Russell 2000. We got into this trade right here on Monday the 6th. So we started off shorting this market as we came into the beginning of the week. Now, the rationale was to play very tactically here. This was a very short-term trade looking to be pretty nimble, and we were trying to play from the top of the channel to the bottom of the channel. So the IWM has been trading very cleanly in this channel now for 10, 12 weeks, until Friday, of course, as we're trying to break out now. But back on Monday, what we saw was we had a strong close Friday towards the upper end of this channel, and Monday, IWM was the weakest of the index of the major averages, giving almost all of Friday's gains back and closing near the lows. So what we used was the closing price to get short IWM with a stop above here. So basically saying we're going to try and short this back following the same pattern that it's been doing to the lower end of this channel, and putting our stop above here if it does want to break out. And we played this via the TZA. So our specific entry in TZA was at $19.22. That's the closing price here on Monday the 6th. The following day, we saw immediate follow through in our favor, in our direction. And what we did was take 30% of that trade off at $19.52. So it was towards the highs of the day right here. If you can see where my cursor is, that's where we took 30% of the trade off. So scaling some profits off. Again, we want to be tactical in this trade and not not be too greedy. We know it's semi-counter trend in nature. Then the next day on Wednesday, we saw more follow through initially. We took 30% of the trade off near the highs of the day, getting them off at $19.92. So right up here near the highs of the day. Now, originally we would try and again hold until the next day, see if we can get another day of follow through. But given how this reversed and closed near the lows of the session, given how the IWM flipped to this reversal at hand, we decided that it was not in our best interest. It was not going to be too favorable to try and hold this for another day. We exited the trade on the close here on Wednesday, the rest of the trade at $19.54. So if we go back to the IWM, you can basically see here, getting short right here, selling partial into here, selling partial into here, and then closing the rest near the close of the day. That was the full trade, 2 days in duration, ended up being a $345 trade on that model trading account. So very tactical. You can see, of course, now as soon as we exited, we did get that follow through reversal to the upside, and then a breakout here on Friday. So it was a good exit, well-timed trade. It was quick, nimble, and it did, in fact, work out in our direction. So always nice to see that in those counter trend sort of reversal plays. XLNX, this was the next trade that we got into this week. So this was a reversal trade. XLNX is in the semiconductor space. Like many of these other names, had a strong run up through November, December, and then started to cool off towards the beginning of this year. So a very methodical pullback to the 8 and 20 period EMAs, a lot of sideways movement. And what we saw carved out here was some support right in this $57 level, 57 and a quarter. And this was the entry day on Thursday the 2nd. And the reason for entering on this particular day was because we saw a very convincing looking reversal candle get printed. So we actually saw a new low get printed on Thursday, but then saw a nice push higher and close near the highs of the day. So that was our signal to get long XLNX. We did so at $58.13. Now, we were playing for a move up towards $59, $60 area, trying to get trend resumption back to the upside, but that didn't happen. We actually just saw this completely stall out and get super choppy and boring inside of this very tight range. We almost had a day where we thought we were going to get some follow through here on Wednesday, but that ultimately got rejected, faded, and closed lower on the day or slightly higher on the day. And then Thursday, it kind of followed through and looked weak here. Thursday also was when we had NVIDIA earnings coming out after hours, so we knew that that would have an impact on this sector. So Thursday was the exit, mostly due to just a time stop. The reversal that we played for back here on Thursday really didn't mean a whole lot after we went sideways for so long now. This really could kind of break either way, and I'd rather just step aside, not flip a coin, not play guessing games, and just get back involved. If this does decide to break out, I have no problem buying this back up at 58, 60, 59, or so be it. If this wants to continue higher, I still like the setup, I still like the tightness, but I'm not willing to just gamble in here sideways and with those influential earnings out on Thursday. So this was an exit for us. It's basically a scratch. I mean, it was a $40 loss, minus 0.22%, ended up being a 13-cent loss. So really tight, just more of a time stop there, not wanting to get turned up there on any potential bad earnings results. Next trade was DWT. Now, DWT, I discussed this entry in a blog post earlier in the week. This is inverse of USO. So essentially playing a bearish bet on USO, and this day was the entry. And really, the best way to look at this is just to look back at the blog post that's on the site. If you go to thetraderist.com, you'll see it there on the home page. This was the signal. This was the entry that we were going for on this day here, and we were playing for a breakdown of this trend line of this very tight range that USO had traded in for about 10-12 weeks or so. And we also had some commitment of traders reports on our favor with very heavily long money managers in WTI Brent crude oil. So we were playing for this breakdown to materialize into something bigger. Of course, that didn't happen. What we saw the very next day was a little bit of follow through initially, and then a reversal back against our position. So this was not a very pretty candle for us. We didn't like to see this kind of reversal here, but this by itself was not enough to stop us out of our position. We really needed to see a little more proof from the bulls that this breakdown wasn't going to happen. They did sort of prove it to us the very next day on Thursday as we saw a gap higher, and then it held up here near the trend line. We exited on Thursday, so we exited on this day here. Luckily so, because Friday we saw another gap. So DWT ended up being a $295 loss on this model trading account. Not the full loss. Again, we exited this trade a little bit earlier before it truly hit our stop loss, mostly because of the overnight risk and the gap risk here in USO. So for precisely exactly what happened here on Friday with this gap higher, that's exactly what we didn't want to see happen. So as much as we would have, perhaps liked to see it prove it a little bit more here intraday, 1144, 1145 started to really reclaim from this session, this trend line. That's what would have ultimately got us out of this position. That was our true stop loss. But given how it still closed near it with the overnight coming up, we decided to exit a little bit earlier, and luckily so it worked in our favor. So USO failed breakout attempt. That was the trade, and then finally FTV. So FTV would have been a bigger winner, but this was a half-size position for us, so I did normalize this. Instead of it being a $400 winner, ended up being just a $200 winner because we only took half a size. But this was the setup. We got involved on this day here for a breakout on Wednesday, February 8th. I believe this was actually earnings day as well, and what we saw was a lower open here below the past few sessions, and then a rally all day, closing near the highs. Very strong uptick in volume, engulfing the prior day, and closing at all-time highs. So that was the entry there at the close of the day at $56.20. And we saw immediate follow-through here on Thursday. And on Friday, we saw a little bit more of an indecisive candle here, a bit of a doji. Didn't really follow through with a tremendous amount of strength, even though the market was pretty strong. We exited the trade here on Friday. Now, really not an exit solely based on this price action or achieving any target. This really was more of a portfolio management decision as well, just because we had some other long positions coming on board on Friday, and we really wanted to just tighten up a little more sort of our existing exposure and our outstanding risk. So we took off this trade here for a quick gain. Ended up being about a precisely 95 cent gain, in at 56.20, out at 57.15, exactly where it closed. And it still looks good. I mean, we could still perhaps get another trade out of this in the near future. We'll have it on our watch list, but a quick breakout trade. And again, really kind of jumping out of this one a little bit earlier, mostly due to some other positions that were coming on. So those were the 4 trades. Ended up being a positive 0.42% gain on the week, or $210 on that trading account. So hope this video was helpful. As a reminder again, if you want to receive our trade alerts in real time, you can head to thetraderist.com/premium. That'll bring you to a page with a lot more info. And again, as low as $25 a month, you can get access to all of our trades. So hope you had a great trading week. Have a great rest of the week and I will talk to you again soon. Thanks for watching.